Hi, my name is Darren Joseph from HEJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having a great conversation with Michael and Nuno. Michael, would you like to introduce yourself?
Thanks, Darren. Good to be here. After a career in consulting in the international tax planning game, I'm now the founder of an investment platform in Portugal with some interesting golden visa qualifying investment products.
Fantastic. And Nuno?
As Michael was saying, thank you very much for the invitation to be here. I'm a tax partner at CMS, which is a Portuguese-based law firm, but present in 45 countries. We have been, and I've been very active in the private clients sector, mostly obviously in respect of taxes, but also touching upon golden visa, and that's why I've been working actively also with Michael in this sector.
Fantastic. Now, sticking with the theme of entrepreneurs starting their own businesses and stuff like that, a common structure that I guess we all see would be that entrepreneur moving to Portugal, and then for whatever reason, whether they're US exposed or not, using US structures, so US LLCs or US C Corps or US S Corps. And so my question is, and I guess it's very nuanced, but how does the Portuguese tax office view someone who is in Portugal, so Portugal tax resident, but they are working on behalf of operating, it depends, that entity in the US? How is that viewed?
I think that we all know that US LLCs and US S Corps are typically pass-through entities, meaning that no income taxes are paid at the business level, so they are paid in the hands of the shareholder. But the thing is, first of all, if you are a Portuguese tax resident and you benefit from this NHR 2.0, that income is irrelevant for the Portuguese tax authorities, because not irrelevant in the sense that I will need to declare it in Portugal, but it will be fully exempt from tax under the NHR 2.0 because it will be deemed as an income coming from abroad. So it will be fully exempt from tax in Portugal. And that was already the case in respect of US clients when we had LLCs owned by clients that were NHR 1.0. Because in that case, it was deemed as a pass-through entity. But when you look at the double tax treaty between Portugal and the US, because the US is allowed to tax, Portugal would exempt it. On the NHR 2.0, irrespective of what the US does, Portugal will always exempt it because it's an income that is coming from abroad. If you are a Portuguese...
I was just thinking about reflecting on what you said. What about instances where there is no economic substance in the US? Basically, the place of effective management is in Portugal. Would that still be the case?
Yeah. No, so I think there are two different angles to explore. One is, as I was saying, from a Portuguese tax perspective, and assuming that the US Corp or the LLC exists for a reason, and it has some level of substance in the US, there are two possible angles. You are NHR 2.0 and you are completely exempt from tax because the pass-through income would be exempt in Portugal because it's coming from abroad. Or you are a regular Portuguese tax resident, meaning that you don't benefit from the NHR 2.0, and the allocation of income would be taxed at the Portuguese progressive tax rates, as I was mentioning, go up to 48%. The question that you are raising, Darren, leads us to a different issue, and that is true if I have a US LLC, if I have a Maltese company, if I have a Cyprus entity, anyone that is a Portuguese tax resident and has, let's say, a company outside of Portugal, which is typically something that is tax efficient, there are several risks that need to be taken into consideration. The first one is, as you were saying, the place of effective management. If the decisions regarding the company are being taken by the Portuguese tax resident in Portugal, then the Portuguese tax authorities might decide that the company is being effectively managed from here, making the company liable to Portuguese corporate tax as if it was a Portuguese company, or as if it was a non-Portuguese company with a branch in Portugal. This would be the number one risk. The number two risk, which is a bit more technical, has to do with CFC rules, which stands for Controlled Foreign Companies. If the company is located in a low tax jurisdiction, and low tax jurisdiction doesn't mean only tax havens, it also means companies or located in jurisdictions where the effective corporate tax rate is under 50% of our tax rate, which is 20. So meaning any country that has an effective tax rate lower than 10, and if that company is not doing a real business locally, then the income could be taxed at the level of the Portuguese individual at Portuguese tax rates. Then the third risk would be the permanent establishment risk, which is if the operation or a part of the operation is being run in Portugal, it might create that permanent establishment concept in Portugal, which would mean that the part of your profit would be liable to Portuguese taxation as well. When you look at all of this, Darren, and this is true for US LLC as well, or even a US corp, I think that having a non-Portuguese company can obviously be tax efficient, but it needs to be properly structured and compliant, and it needs to have a local economic substance, because otherwise there is an increasing risk, because I think that there is an international tax environment nowadays, is to try and tackle companies that don't have substance. I think that we always have the risk of this being deemed as a Portuguese sourced income because it was generated by the person and not by a foreign entity. This even under an NHR 2.0, where you are exempt from non-Portuguese sourced income, if the angle that the tax authorities is to try and say that the company doesn't really exist, it's just an artificial creation, then it is the person that is living in Portugal that is generating the income, and it is generating it in Portugal, and therefore it could be liable to Portuguese tax because it wouldn't be deemed as coming from abroad.
Fantastic.
Michael, if someone wanted to reach you to find out more about golden visa opportunities, what's the best way to find you?
Reach out directly. I've always experienced such a warm welcome in Portugal, and people looking at the jurisdiction, I'm happy to make sure they get the same level of experience. Email, it's available on my website, through LinkedIn. I'm generally very, very responsive. Looking forward to engaging with a few more people.
Michael Maxwell on LinkedIn. And what's your website? What's your URL again?
It's portugalpanorama.com. So email address is michael@portugalpanorama.com.
Fantastic. And Nuno, what's the best way to find you?
Look, I think that, again, the email is an option, which is nuno.santos@cmsportugal.com. I think it's probably the best way. And then obviously you engaging, we can talk via WhatsApp or phone. It's fine. All of them work.
Fantastic. Thank you very much. And we'll see you next time.